In this price action trading lesson, we're going to talk about how to identify high probability setups using price action rules. The very first step I need to do as a price action trader is to identify the overall market context, which right now is indecision. This means this is some form of a trading range because we have move down, move up. So this is unclear structure. There is no clear strong trend in either direction. Now, when I'm watching this structure before the stock market open, I can see that I have uptrend working higher with a break and a new extreme, which means the trend line rule played out, and I have actually lower high that is also first entry short, pullback, second entry short, which worked way for a nice scalp, but I cannot take it because this is exactly around the stock market open. And at the open, the market volatility may increase. There can be spike in volatility and a little fake out, so we prefer not to take setups exactly around the open. But shortly after, the market completely flattened, EMA is flat, and we are entering a consolidation. I was leaning more bearish the whole time because we had two-legged pullback up, but because small consolidation formed, which is what I want to mark because I want to analyze the structure better, so I always like to draw these lines on a chart so it's easy for me to identify what is the structure, and this way I'm not overlooking anything. I cannot take anything because the bias is now unclear. I'm exactly in the middle of this congestion. And right now price action is breaking here, so this is where you're going to have to make your first decision as a trader for today, which channel you're going to select, because I can draw channel from the beginning of the uptrend because I can see series of higher lows. So this means there's probably a bigger channel. I can draw wide channel like this, but I can see that I'm not touching this line perfectly. And more importantly, it all comes down to what you identified initially as the market context. Okay, this will help you to distinguish which option is valid, this wider channel or this tighter one. And because we identified that there is no strong trend in either direction, that this is a consolidation, a trend range, I'm going to draw my channels tighter. I'm not going to draw them wider. I'm going to stick to tight channels as possible. And you can also see how nicely the bodies fit on this trend line. The recent confirmation, which bodies generally are much better confirmation than tails. You prefer to see bodies, so I'm going to copy it, put it at the top. So hopefully it is clear why you're selecting tighter channel with the break and the new extreme. So according to trend line rule, uptrend played out, and what can help you to truly solidify this analysis is the fact that this previous support of the trend range is now acting as a resistance. So when I'm watching this, what am I expecting? Because I can see push below, first entry long failure, and as I can see price action breaking below the EMA, I'm expecting failed second entry long, reversal pattern. Because a lot of times you're going to have weak bulls trying to play the wider channel in trend range, and they're going to get trapped on second entry long below EMA. So because it is below EMA, I expect to fail second entry long, which we have here, but notice the signal bar is still quite bullish and far away from the EMA. So because the signal bar is this lackluster, not fully at the EMA, and is not bearish, I cannot really take it. But context-wise, this failed second entry long is exactly the high probability setup you are expecting. Now the downtrend was established, and right now the shortened bias is bearish, and we have a second entry short, new low, first entry short, pullback, second entry short at the EMA, while this downtrend needs to get new extreme. Okay, so this is what I do in trend ranges. I just follow the short-term channels. However, this bar is way too big. You can see I have almost no room to scalp out before these lows, and also this is first leg up. So we cannot really take it, no room, and the bar is too big. So we have a new extreme, downtrend played out. And right now, what is the bias? Ask yourself, what is the bias? Well, you cannot really tell. EMA is flattening, uptrend played out, downtrend played out. We are in the middle of no man's land. So when I'm in the middle of no man's land and there is no clear bias or key entry point, I'm not even trying to analyze the structure because it is tempting to both buy and sell at the same time. You can see it is tempting to sell this lower high, and it is tempting to buy the second entry long. So this is not how price action trading is supposed to feel to you. You're supposed to always lean and expect only one outcome. And in this scenario, I can see clear indecision, unclear bias. You have a small break, attempt to create new high, very close, micro double top. And we actually have decent lower high. Okay, new low, first entry short, second entry short. And this lower high is confirming the second entry short, which the signal bar is nice, closing below EMA. It is not that big. So this is first decent high probability setup because it is confirming the second entry short. And also you're at the highs of the small trend range because EMA flattened and it looks like a small trend range has been established. So stop loss goes one thing above the signal bar. You wait for break below this bar. If there's no break, there's no entry. There is a break, and the setup fortunately worked for 2-point scalp. So this is how I'm trying to navigate this consolidating market. You can see this is clearly a trading range, so you cannot really draw your channels wider. Try to make them as tight as possible. What I'm going to do, I'm going to select this key level at the top. I'm going to try to locate as many confirmations as I can at the bottom. Okay, because this is move down, move up, move down, move up. EMA is very flat, so I always want to find the extremes of a trend range, so I know I'm not selling directly into these lows and directly into these highs. So we are eventually breaking higher, so once again I have to redraw the short-term uptrend. You have a first entry long, pullback, second entry long, which we of course cannot take far away from the EMA and directly into these highs. I'm going to mark new extreme. Now we're at the top of the trend range, so what's going through my mind is, okay, the bullish imbalance right now is not significant. This is still pretty much healthy trend range, so I'm expecting a failed second entry long below EMA and push all the way down here. The first clue that the failed second entry long will not form is because this downtrend already has a break new low and we have two very broad legs. The broader these two legs are, that's a confirmation that there is most likely not going to be failed second entry long. In fact, you can see second entry long created a push up, and I can see a small consolidation being formed at the top. So I cannot really go long directly into these highs. The signal bar is bad, and I cannot sell. We cannot go below EMA, and we cannot see a failed second entry long. So this is once again stacked area, no trade zone. You can see how all of these early sellers who are selling too early, they ran their stops, failed breakout just like we talked about in our previous lesson, and all the early buyers, they're forced to exit, and eventually the failed breakout push all those stops and we continue working lower. I'm going to redraw the short-term downtrend. Now when I'm watching this, I'm still leaning more bearish. They were going to push all the way down, but this is what changed the structure of the market, and you can see push above EMA. Why is this so significant? Because you have to ask yourself, why did we bounce from the middle of this trend range? And every single major low is higher than the previous one. So this is what we call a bullish imbalance. Because when you're trading a trend range, you monitor the health of a trend range, which is you look for bearish or bullish imbalance. We have static highs, but we have high lows. So this is what we call bullish imbalance, and this was pivotal. This push above EMA confirmed our bullish imbalance. So we have push higher, you have a first entry short, little pullback, second entry short failure, and you have also new high, first entry long, pullback, second entry long. So this is double high probability setup. This is a second entry long and also failed second entry short. And this is a great high probability setup because it confirmed the bullish imbalance. It is above EMA, it is a nice bullish bar. The bar is fairly big, so I prefer using a limit order, wait for break higher, drop a limit order, 2 or 3 ticks back to decrease your risk. And fortunately, the scalp was made. You have a new high, first entry long, pullback, second entry long failure. Now we even have failed second entry long with a great signal bar. And this is at the top of the trend range, a little failed breakout. So I like even going short here. I'm going to mark it more aggressive because now you are aware that we have bullish imbalance. Every single major low is higher. So you like to see some confirmed downtrend, but because a lot of bulls must have gotten trapped going long directly into these highs, I like taking a chance here, but same scenario is here, 2.75, 2.75, use your limit order 2 or 3 ticks back so you can get out and get your scalp. What is happening now is very common. It is where bullish imbalance will create a successful breakout. So this is what is happening. Every single high is still forming higher and higher. When you see imbalance, bullish or bearish, you are not fading breakouts like you would in normal healthy trend range, because the breakout may succeed. And once we push all the way up here, you're so far from the original breakout. I'm leaning more bullish and I'm expecting, in fact, retest of this short-term channel. So price action is really telling you everything you need to know. You just need to observe what it is telling you, identify the key levels, monitor the health of a trend range. Now we only had first entry long and we created a new extreme. So I'm going to mark my new high. We have small trend range right here. Small consolidation. I have a new high, first entry long, pullback. Of course, I cannot take second entry long below EMA. Now when I'm watching this, I'm looking for a potential spike in a channel like this. But I wanted to see it get it confirmed. Since we didn't get it confirmed, I didn't really like trusting this at the time, so I deleted it. I found the break new high. Notice you have a short-term downtrend working lower. We have a small break new extreme and a massive push above EMA. So this is important because we broke higher. and uptrend started, there is a chance there may be an even wider channel. Now we have new high, first entry long, pullback, second entry long. I cannot take below EMA, but now we have push above EMA and a high-low confirmation setup. The signal bar is below 2 points, and you're not only at the EMA, which is one key entry point. Notice the previous support of this consolidation is coming into play again. So you have 2 key entry points, downtrend played out, confirmation of the second entry long, and I like taking this because it's confirming the bullish bias right now. After bullish imbalance, this is a great high-low confirmation setup of the second entry long. We have another second entry long, but I cannot take it because I have a downtrend in play. Plus, we don't have a clear uptrend. Then we're staying below EMA and price action keeps correcting. So what I have to do is I need to adjust my downtrend a little bit wider because the correction is longer. I'm also going to extend the resistance and support line because right now it's getting obvious that the structure established as another trend range. We have move up, move down, move up, move down, move back up. EMA is flattening for a significant amount of time. So this is right now a small trend range. I cannot go long directly into these highs. And this price action is creating the second leg to new extreme of this downtrend. This is starting to look like there may be potentially wider channel like this. So this is what I was looking for. Copy, put at the top. Now, the structure for the entire day was a trend range. So even though you have a lot of confirmations here, you're generally better off playing just bullish imbalance and treating the tighter channels as your main option. But this looks like such a nice clear two-legged pullback and the channel is getting confirmed. I was thinking about this channel coming into play. Even though this is going to work for a scalp, I cannot go long because I want to see push above EMA and I want to see price action staying above EMA and I want to get a high low or preferably failed second entry short. It will be the ultimate trap. That is not forming and price action is completely reversing down, which is confirming, okay, this was truly the entire day training structure. Even though wider channels have a lot of confirmations, they most of the times are going to be invalid. So what I have to do right now is because the retracement is so deep, I have to forget about the uptrend and I have to adapt. So what I'm going to do, I'm going to select the downtrend like this, the wider one, and I'm also going to draw downtrend that is tighter like this. Observe this strong bearish spike down. I don't have any trend channel line confirmation, which is difficult because I'm not sure if this is overshoot. Is this really the bottom of the trend channel line? I have a second entry short here, but I cannot sell far from the EMA. The bias is bearish, so I am thinking mainly about selling. I have now visual to like a pullback and double trap. But EMA didn't reject at first, we broke higher. And because this was such a massive bearish depletion, I have only one swing here. I'm not really sure if we're going to break higher. If I'm not sure like this, I want to see lower high confirmation setup because what if we're going to go all the way to this trend line? This is very possible. There's going to be one little push higher. We're going to confirm the trend line and then we're going to continue working lower. And lo and behold, shortly after we got a lower high confirmation setup because now we broke lower. We tested the EMA once, twice, and EMA didn't really get tested fully here because we broke higher. But now it is showing more signs of rejection. Your signal bar is bullish. You cannot sell below bullish bar. We can wait for a follow-up bar and treat this as double bar entry, meaning we're going to wait for break below this bearish bar, drop our limit order a couple ticks back. Let's say I like placing it at the low of the first bullish bar. However, your stop loss still needs to go one tick above the initial bullish bar. So this is a great lower high confirmation setup, high probability setup, because now it's getting clear that the structure is getting confirmed. Double rejection of the EMA. I can mark this double trap as more aggressive. It is an inside bar, but you know, more aggressive trader can consider this is the safer setup because now it's obvious that the EMA is rejecting and we're going to continue working lower. The bearish bias is resuming and this is a large two-legged pullback. We have a failed second entry long counting from the highest high of the correction. Okay, this is the highest high of this correction. First entry long, pullback, second entry long, failure. Why are we counting for a second entry long? We're counting for second entry long to fail because the trend is down. We're not only looking for two-legged pullbacks to sell, but failed two-legged pullbacks to go long that the bulls are going to get trapped on. It is at the key entry point, but the half of this bar is bullish tail. This is horrible bar. I cannot sell below bar like this with such a massive bullish tail. So I cannot take it. And now it's getting way too late. This is the overall picture for today. When you're trading in trading range, make sure you know where the key extremes of a trading range are. You also want to monitor the health of a trading range, whether there is a bullish or bearish imbalance, because this will help you identify the most recent bias inside of a trading range and whether the breakout will be successful or not. And lastly, which is important, when you're trading trading range, you prefer selecting tighter channels. Wider channels may be valid, but most of the times you're better off focusing on the tighter channels and just following those tighter channels. So I hope you had a good trading day. I hope you find the lesson helpful. If you did, subscribe to the channel, like the video, and I'm going to talk to you next time. Good luck with your trading.